$20,000 every single month. Let me reverse a little bit. What if I told you I could take you from $0 to $20,000 every single month with day trading and scalping? Now, it is going to be a process, but I'm going to show you from point A all the way to Z everything that this entails. And I'm telling you right now, I have evidence to show that this actually works. Not only are traders under me, but I'm gonna show you my success just from the past, give or take, month or so. And it's kind of been a slower month for me. Let's not waste any time. Let's get to it. The first thing that I do want to say right now is I just want to go over a few of the statements from my Rise account of some of my payouts more recently. This is, again, as you can see, going back into roughly the 20th of March. As you can see here, there's some of my withdrawals. You can see all those. The bigger one being here from top one as well. Again, I'm going to be explaining all this in detail, and this is just from the future side. This isn't anything to do with my Top Step account, which is also futures, and also going into what's happening with my overall option trades and things along those lines. This is just futures. I want to make that very, very clear. And this could happen and is very obtainable for most people. I'm going to explain exactly how. Let's go more into the indicators and the strategy at hand. The first thing we're going to do as we jump into this, before we go into the complete strategy, everything like that, I'm going to get you set up on your chart. I want to get you set up so you have everything that I have on mine and you can start really working right alongside with me. So today we're going to be using tradingview.com. There's an app as well. You can check it out. Now, what I'm going to do is go into my only indicators that I'm using except volume. I do have volume and I moved that all the way to the bottom. Though I just separate it so you can just put in whatever volume indicator you want to use. I'm going to use a simple volume for the sake of the video. Then I'm going to go into VWAP. Everyone always asks me, what VWAP do I use? It's literally a normal VWAP. There's no anchored. It's nothing crazy. You just type in VWAP. You add it in. It might come in kind of funky like this, where it has like a band. I hate that they do this now. But again, you put that in there. You just go to settings. And what I do is I turn everything off except VWAP. And that's it. That's all you need. Bada bing, bada boom. The next thing that I'll add is going to be the EMA. Again, EMA, this is the only EMA that I ever use on my chart, just to let you know. Moving average exponential. And then you're going to go in, make sure it's the 9, which usually should be set to the 9 off rip. Put that there. And I always make it just a little bit thicker so you can see it a little bit better. That is that as well. And I'll go into that here in a second. So that's number one, number two. Those are really all you really need. You don't need a lot more. You get a little bit extra after that. Now, I do have the 100 and 200 daily SMA. Those are for higher time frame trends and understanding bias. I'm not going to go into that too much here in the video today, but you can have those and you just type in the, for the sake of TradingView, it's going to be SMA, simple moving average, right? Not smooth, simple. If you're on a different platform, it might just be MA, just moving average. So whatever, test it out for yourself. After you put those in, I go in and I change the setting so it's anchored to a time frame. How you do that, you go into length right here, obviously the 100, and then the other one I have is the 200, and then I'll make sure that's set to the time frame of the daily, because that's all I want to see. I don't want to see the 5 minute, the week. I mean, I want to see the daily time frame. That's all I want to see on that, so I can turn it on, turn it off when I need to, so I know exactly where those levels are at. Okay, so that's all you need right there. Now the last one, and I have a video going over this, is what's happening with the overall opening range breakout, which I'll go into more today as well, because that's really one of the things that ties this all together too, and really provides clear entries when some of you guys don't really understand price action yet. So you can just type in ORB. There are tons of these out there. Typically the 15-minute is what you want to have. And again, you can just type that in there. I'll use the sake of the video. I'll use this one as well. Put that right there. You're going to go into settings, and you want to just make sure that this is set for your opening range of whatever your day is, right? That's all you really care about. That is all you're really trying to see. So again, so this one's a little bit off, so I'd rather go to a different one where you can customize the setting, because you want to make sure you can customize when your opening range actually is occurring. So we're going to use this opening range here. I've used a bunch of these before. So again, we're going to go to the 15-minute. That's what we want to see. Then our opening range starts from market open from a New York session, which is going to be 8:30 for me. I'm Central Time, whatever your time zone you're in. Make sure it's the first 15 minutes of market open, 8:30 to 8:45. Automatically, that is set. That's what you want to see there. That is literally the only indicators you need. Have you set up? That took me less than 3 minutes. You're good to go. Let's move on. Before I go too much further in the video, I want to make sure I do give a shout out to Discord if you are interested. I provide a lot of free information, education here on the platform. But if you want to see what we're doing every single day, how I'm attacking the markets, what I'm looking for, me and my partner Jordan are posting every single day live inside of Discord, so you guys can stay up to date on everything. We go into futures, what we're looking for there. We go into our trade ideas, all the stocks and what we're looking for, how we're trading there as well, whether it's trading options or trading futures. I trade a lot of futures now, but we also trade options intraday as well when the setups are there. there. Take more of the scalps on futures and more of the overall day trade, swing trades on what's happening with options. That just makes more sense, especially with this environment. You can go down to see technicals, all the best setups, everything that's laid out there as well for you every single day. The profits are there for you as well, as you can scroll through and see that as well. But the link is down below if you are interested. Make sure you check it out. We also have a lot of free content down there as well, so make sure you tap in. Again, we're there every day, all day, Monday through Friday. Weekends are a little bit slow, I'll be totally honest with that. And then the next thing I'm going to say is I'm going to go more into scaling accounts. But I just want to make sure you guys know who I'm using for my trading personally. Primarily, this is Top One Futures. And again, right now they're doing, if you go to their site, I think it's 50% off. But if you use my code Jefe, Jefe, you get 55% off. And I use the instant sim accounts to 150Ks. However, they have a new account that will be released very soon. And I believe they're going to be doing 7 accounts total, which will be kind of crazy. And it's on Project X, which is where I do a lot of my trading as well. So again, you can check that out. I have a lot of videos on that. The link is down below for that. So make sure you just give it a check out. Right now, today we're going to be I want to be wrapping into a lot of this. So if you've been paying attention to the channel, we've been going over a lot. So this video is going to be like a crash course into everything that you need to know. You can skip ahead if you need to. You can go back. You can bookmark. Last week we went over developing a market bias. Before that, we did optimal trade entries, why it's so important. And I cover this a lot in my YouTube videos as well. Then we went through the process of scaling, which goes right back into Top One of how you can start with one account and then scale into making $10,000, $20,000. And I wanted to make sure that I was pushing this as an understandable metric and an understandable viewpoint of what we're trying to do and what we're trying to accomplish here. So it's a step-by-step process. So today we're going to be going through a lot of this. So buckle in. I'm going to try to go through it fast. Stay with me. Now, the first thing that I want to do is go more into the strategy of overall what we're looking to do at all points in time, okay? Now, let me break down the indicators as well. So, again, a lot of you guys haven't seen me mention the 90 MA a bunch. The 90 MA is basically a continuation indicator, so let me make this clearish first, right? So, if you're looking and you're getting downside of what you're looking for here, specifically on something like NQ. So we make, we start to break down. You have your flag playing out here, right? And then you start to break down. Well, the 90 MA is a continuation indicator. So if you start holding below the 90 MA on the 5-minute time frame, then that's when you're looking for that continuation. So you can see that we break down from 21.3 all the way down to lows of like 21,000, 21,007. You bounce back up right into our support, right? And so a good rule of thumb is when you moved into your target, so probably start taking some profits. But when the trade really starts to flip back and the trend might start getting a bounce, is you get back above the 90 MA and then look, you flip and you start grinding back to the upside, which again, I've gone in detail about, but that's really what the 90 MA is for. It's not a pure entry indicator. I don't use it for entries. I use it more for understanding and getting more confirmation of, okay, we're still moving in the direction that I'm looking at. I have more confirmation in the way that I was viewing that trade in the first place, if that makes sense. You can go to smaller time frames like the 1 minute as well. Just know that it's going to flip a lot quicker, so you might get out of your trade or might get kind of spooked out of a trade a little bit sooner than you wanted to, okay? The next one is going to be VWAP. VWAP is going to really help you with your bias. So like when I go back into this one, if you guys watched my previous video going over developing a market bias here, a lot of this, we talked about key levels, assessing buyer and sellers reactions, but a lot of these reactions happen off of the VWAP, right? So the VWAP is this blue line. And again, it's always in the blue line on my screen, on all my charts. The VWAP should be relatively anchored as well to no matter what time frame. It might shift a little bit, but when you're trending above the VWAP, I typically say intraday you're looking more bullish. You're looking for upside key levels or upside targets. If you're below the VWAP, you're looking for downside levels, downside targets. Okay, very important to understand that. What I'd be looking for there. Super simple. And you're also looking to get the most volume typically intraday near that VWAP. So if you're moving, so the market opens at 8:30 and it closes at 3 o'clock, between 10 a.m. and I would say 2 p.m., the most volume you're going to get intraday will be around the VWAP, 9 out of 10 times from my personal experience. And again, understanding your key levels and your targets, I'm not going to go too deep into that today. I've gone into that in kind of other videos. If people want to get more insight into how I'm doing that, I think Discord is the best way because you can see in real time why me and Jay are marking out these levels and what we're doing when we're live on WAP as well. So the link is there for that also, so check it out. There's also a free Discord, so you can check it out. The link is still there. But again, what we're looking at right now. So VWAP, 90 MA, biggest things there. Opening range, what's happening there as well. This is where things get a little bit more interesting, as this is where you get some of your bigger opportunities and we start taking a lot more trades. So to give you a premise of what we're trying to do, let me just move all this out of the way. We have a lot of levels up here. The basis of my trading is all based off of reactions, seeing buyers, seeing sellers, and then reacting from what they're doing, okay? So this is the greatest example right here. So let's say that our action is we are trending in this range. Now, I'm not going to probably take a lot of trades in this. I might scalp back and forth, but I'm not going to make a lot of money here. This is not where I'm going to make all my money. Where I'm going to make my money is when we break out, typically, right, to the up or to the downside. Now, people get mad and they say, well, Tyler, you mark out multiple spots. You're looking at the upside and the downside. Well, as a trader, you have to be able to look at the upside and the downside, of course, right? So when we look at that, it's important that we're going into with that kind of thought process of what we're doing, is that we're prepared for both sides of the trade. We're not confined to one area of the market. And that's really what we're doing here. So when we're looking at this, ideally what we want to see for the sake of this is either a breakout to the up or to the downside, but we're always waiting on that reaction. So if we get, let's say we're trending back and forth and then we start to break out. Am I going long on the breakout? Typically, no. I'm looking for the retest and then a break back up because I want to see that reaction from buyers. Because if it's a true breakout, typically you're going to get that break and then a strong reaction from buyers. Now, maybe it won't be a perfect retest. Maybe it'll be down the line, but you'll always get some sort of reaction and you'll get more of a tried and true break of the trend. And the same thing goes for the downside. If you're breaking out, you look for that retest of the downside. So when we go back to the opening range, this provides a little bit more clarity as well. So the 15-minute from, if you guys have seen my previous video on the opening range, you guys have seen that this has been a really big deciding factor. So when you break out of this opening range, you've typically moved into our next key level of the upside, which is 21.53. And if you've broken down to our next key level, which is 21.1. And for the sake of this, I like to use Discord because I can show you in real time what we were looking at and why we were looking at it, right? So you can see here, our level was already drawn out this morning. Again, this was made, this was Friday, 6:46 p.m., I believe. No, this was Thursday, right? So you can actually see we start to break down and boom, you come right into our key level. So why we're looking at that, why we're watching it, and kind of gets confirmed with the break of our overall previous level and then the opening range breakout as well. So helps you tie that in. So you're going to get more confirmation of trades in both overall directions and what you're looking for. Now, the next part of this is going back into something I covered in a previous video, which is optimal trade entries. I think this can be a little bit maybe overlooked is the word. Now, this is a process of what I do before and this is how my brain just works, right? And I like to break things down so you guys can see exactly what I'm thinking, what's going through my mind, right? So when we look at this is, you can take a screenshot if you want, right? This is what you're really looking for typically, or at least I am throughout looking for a trade, right? You develop your trade plan, intraday, what you're looking for. This goes back into how I mark out every single day in Discord. Me or Jordan, right? I make a trade plan for the NASDAQ, for ES, what I'm looking for. It doesn't have to be intense. It can be very simple, what your levels are, etc. You make that trade plan, and then you understand what you're looking for from there. Now, how do you establish your bias? Now, I went back into the previous video if you've watched it, but a quick way and rule of thumb is just going simply into like something like here. If you're trading above VWAP, number one, it looks pretty good. If you break above your opening range, then number two, you look really good. So that bias would have to be kind of bullish, looking for that upside next target. Same thing in the downside, under VWAP, under the 15-minute opening range, looking for downside. Well, then you ask, well, Tyler, what do you do if you're inside of this range? What do you do? That's not a great trade, right? You're trading a range, you have less clarity, you don't really have a clear bias, but that's what you're looking for there. Then from there, you look at your entry point, typically a break and retest, looking for a reaction, right? What you're looking for right there. Now, again, if you can't make that bias, if you don't have a solid bias, right, you don't have one, then you reanalyze the market or you be patient. What you're looking for. You may have to reanalyze and not look for a swing. You may not look for a larger trade. You may look for a shorter scalp, something along those lines. Then you go into risk, executing your trade. Is the trade profitable? Journaling as always. And I will tell you right now, guys, I harp on this a lot of my videos, you guys know. Journaling is probably one of the most important things, especially if you are a new trader. Journaling will change everything for you. I'm telling you right now. What I would focus on isn't so much getting a long paragraph about your trade. Just write a simple sentence. Why you got in, why you got out. The end. And I would use the same terminology a lot. So if you got in because of a rejection of VWAP or something along those lines, make sure you're using the same words a lot or the same kind of prompt in your journal so you can quickly search back and forth and you can reference, because I promise you, especially in your losing trades, common denominators will show up over and over again. Okay, now this was a quick rundown of what I'm looking for there with optimal trade entries, but I wanted to make sure that was known and clear for everyone. I also did this. I'm not going to go too much into this today, but this is basically a pros and cons list of both, of waiting for optimal trade entries, being patient versus being more aggressive, impulsive, things like that. You can go through this if you want. But there are pros on both sides. You might miss out on more trades if you're waiting for an optimal entry, but that is that. Now, the process of scaling. Scaling is one of the biggest things out here. And this is where you can really open up your risk, start making more money. And in the beginning of the video, when I went over more of like how I made that, a little bit over $10,000 in around 2.5 weeks on just a prop firm, is showing you guys why and what I was kind of doing there and the mental aspect behind that, right? Again, top one, this is who I've been using, and I will say they have the consistency rule. Their new accounts will have a different rule, but you'll be able to stack those accounts together, just to let you know. So we'll have more information now on Twitter, things like that. But if you are interested, I'd recommend just trying a smaller account first. And if you've never used a funded account, I would just go to the evals. They're cheaper, less risk. I would start there first so you understand. I have a lot of videos on Project X as well, which demonstrates the platform they use. I think it's the best platform for trading, in my personal opinion. But yeah, so going into this, what happens here? Now, I don't want to go over too much at the top. I really want to go into more here of like how you can start really making money. And I personally think that prop firms offer the best path to making more money without using a crazy amount of your own money, right? And so again, for the example I used here is, one account, you're trying to make $200 a day. Now, obviously, if you're making $200 a day on one account, you're just making $200 a day. Now you go from 3 accounts, you start making $200 a day, but at 3, you're making $600 a day, right? So even though you're copy trading those, you can quickly start to accumulate. So instead of 1 week of $200 a day being $1,000, $600 a day can quickly turn into roughly $3,000, and it just starts to stack on top of each other the better and better you get. Now again, I don't recommend going from 0 accounts to 10 accounts or YOLOing into a bunch of max accounts. You're gonna quickly accelerate the process of losing money, especially if you don't know what you're doing. So understand that. And this really is where things get more in line. And you don't have to be taking a lot of trades as well. If you have a good setup, you have a good plan, you can quickly get in, quickly get out, and be done for the day. And I think people don't think enough about that. They think about, well, if I make $200, what if I make $400? What if I make $500? That shouldn't really be the question. It's like, can you start to make money? And then you can start to scale and pivot that in a different way. But the first step is, can you actually do it successfully of what you're looking for there, right? So again, important to understand that. And everything that I do when it comes to my trading all comes back down to this intraday early on strategy of what I'm doing. And it's all built directly on top of each other. So you're going to see me repeating a lot of the things when I'm doing a lot of my education, whether it's analysis, identifying opportunities, executing trades, journaling, recording profit, moving from step 1 to step, 30, right? And the same format over and over and over. And that's, in my opinion, like the secret for success is being redundant, but also having clear-cut paths for what you're looking for, right? So understanding what and why you're doing it, right? So again, what we're doing there. Now, again, going into a lot of this, it's going to be repetitive. It's not supposed to be fun. It's not supposed to be, rainbows, unicorns, printing money every single day, withdrawing. It's supposed to be redundant. It's supposed to have a clear, concise plan, and it's supposed to be repeatable. If what you're doing with your trading isn't repeatable, you don't have a strategy. You're winging it, you are guessing, you're praying for the best. And that's a dangerous, dangerous game to play. And typically things don't go well when you follow that path. That's my personal opinion. If you have any questions, let me know down below. I'll have stuff posted on Twitter. I'll have more videos coming out also. Have a good one, traders.